Good afternoon. Thank you for joining us today. My name is Dan Arlen. I'm the Director of Training and Compliance here at the LeClaire Group. And today we have a new series that we're starting up at LeClaire Group within our asset protection area called Life Insurance 101. And today we're going to be doing this with Megan Dillard, who happens to be our Senior SRM on the life insurance space. And this is an area that Megan feels very passionate about. The life insurance is one area that she really enjoys doing. So this will be great. But before we get going to that, I want to give you a couple little housekeeping items. If you have any questions during this webinar, please, if you could enter them into the chat or the Q&A section. Actually, if you could do the Q&A, that'd be even better, because if by some chance that there's a question that Megan isn't able to answer, she'll have a record of that, so we can go ahead and answer that after the webinar is over. But feel free to ask any questions that you have, and we'll get right to them. With that, I'll turn over to Megan.
Thanks, Dan. Yeah, so as Dan said, I'm Megan Dillard, and I'm the life specialist here at LeClaire. And I'll just qualify real quick and say that I came from a P&C agency selling life in the field, and I was a captive agent. So I understand how difficult sales can be, but also with life insurance, when you have to sell purely on value and not be able to have that premium, a competitive premium, it's pretty difficult. So had a lot of tough conversations with clients surrounding life insurance, and I've seen, what life insurance can do in people's lives. So it is a topic I'm very passionate about. So with that, I'll just go ahead and jump right in. So we've seen why should you be writing life insurance? And the answer is that there's a huge opportunity. In 2021, we saw the greatest increase in life insurance since 1983, and it increased 11% in the first quarter. And this little graph down here at the bottom, you can see every product except for fixed UL had an increase in sales. And I'm going to go into fixed UL, and there's a reason for that. But moral of the story is that growth is increasing, and it's expected to continue through 2022 and possibly beyond. And the changes in the industry, the growth in the industry has been brought about by consumer demand. With the pandemic and the deaths that have gone on, death is on their mind and they're thinking about it. And I think it brought about a lot of people really starting to think about what would happen in their family, what would happen to their loved ones if they were to pass away. So yeah, this growth is brought about by the consumer. And we did see a number of changes with how the life insurance industry does business, how they write policies, how they underwrite, and these are expected to continue. I think they're here to stay. I got this little guy here in the pants because they're used to working at home, they're used to being able to do things from home, and the life insurance industry has been the same thing. There's a lot less in-person interaction, automated and accelerated underwriting. And when I was writing captive life insurance, a lot of times the insurance company would come back and say, hey, we know you quoted this person as preferred, but if they'd be willing to go to non-tobacco and pay a little bit more, we would waive the paramed exam. And a lot of times clients are like, fantastic. They'd rather pay an extra $8 a month than deal with a paramed exam. And then, lastly, changes expected to continue. It seems like the prices have stabilized. We did see an uptick with the pandemic in prices, and it seems like they have stabilized. They're not going up anymore. I spend a lot of time on our quoting tool, term quoting tool, and the products are still very affordable. So that's good news for the industry as well. So what does all this growth and change means for you? Basically, it just gives you a great opportunity to increase revenue and improve client relationships. And offering your clients a holistic insurance portfolio is really important. Because a lot of, I've had a lot of conversations with LeClaire agents, and one of the greatest things that I have seen that our agents have going for them is that they care about their clients. You guys already have trust built with your clients, and these conversations are natural because you care. So it offers another opportunity for you to offer them a greatly needed service. And so do your clients need life insurance? Well, the short answer is yes. If your clients have anybody who would suffer financially if they were to pass away, they need life insurance. So unless they're extremely wealthy and they can afford to self-insure, and that person's family wouldn't hurt if they passed away, then yes, they need life insurance. And let's just quickly go into why people buy life insurance. There's quite a few different reasons. The main ones are to protect someone or something that they love. They buy to accumulate cash value and to transfer wealth to generations or inheritances. And some of the feedback I did get was that, and maybe at retirement age, people don't need life insurance because they're retiring. There's a need for life insurance at every single stage of someone's life. For juveniles, the most important thing in the life insurance industry for children and for juveniles is locking in someone's future insurability. Because as we age, the years bring on the opportunity for us to get sick, have medical conditions that will make us uninsurable. And you can buy a juvenile under 16 years of age, a whole life policy, and lock in their insurability forever. So they would not go through underwriting when they're a kid. And then they will always be able to have that policy. And not only that, but certain policies, you can add riders to where they can purchase more insurance as they age. There's also term policies that have the option to convert to a whole life policy. So you can get a kid, a term policy for $10 a month and be able to convert that to whole life. So you lock in that person's ability to have life insurance forever. They also make great gifts for kids, for grandkids to, leave that gift to their grandkids is huge, or grandparents, excuse me. And then single people, that was one of the, main objections I heard with single people is like, I don't have anything. I don't need it. If I pass away, no one's going to be affected by that. Yeah. Okay, great. You're 24. You live in an apartment. You don't have any assets, but I don't think that you always expect it to be that way. There's going to be, your life is going to change. And again, if you lock in your age, your insurability at 24, you're going to be a lot cheaper to insure than if you wait till you're 35. So that's a big one. And then, so married with no kids, once people start, creating a life together, they're entering into financial contracts with each other, and one person would be affected if the other person was to pass away. Anybody who has a mortgage, somebody else on that mortgage should have a conversation about life insurance. If something were to happen to one person, do you want to keep the house? Do we want to pay the house off? Do we want a number of years paid for, 3 years paid, to give the other person the opportunity to sell the house, to get into something smaller? It's just kind of, again, a conversation that your clients need you to bring up so they can have a conversation about it with their loved ones, with their husband, with their wife. And then married or single with kids just adds on to that, because someone's potential to earn money over the course of their lifetime, if you think about, they earn this much every year, well, 20 years down the line, that's a lot of income that's going to be lost if that person passes away. So there's future things that are going to need to be taken care of and thought about. Those kids going to college, like I said, if they want to keep the house, if someone passed away, we want the house to stay in the family until the kids turn 18. There's a lot more things to think about, future games, sports equipment, cars when they turn 16, the list goes on and on. And then retirement age, especially for older folks that have a lot of assets, they are going to be looking for a place to invest that money. If maybe they've maxed out a Roth or things like that. But life insurance is a great way for people with assets, older people with assets, to invest somewhere. And then of course the elderly. I know our agents work with a large elderly population, and final expense policies are huge for elderly people. Elderly people are ready to have that conversation. You're kind of going to get, people get defensive. They don't want to talk about it when they are younger, but people that have thought about what is going to happen. I don't want anybody to be burdened financially, when I pass away. So final expense policies are a huge opportunity for your guys' book of business, for you to cross-sell your book of business. Not only cross-sell your book of business and make money, but offer your clients a service and peace of mind that, yeah, when you pass away, your family's going to get $15,000, $20,000. They're not going to have to worry. And that person's not going to have to worry.
You know, Megan, as you go through this, and this is one thing I think everybody needs to understand, is that what you're really doing is in a time of need, you're giving someone options.
Mm-hmm.
You know, all of a sudden something traumatic happens and they feel lost. They don't have any options. Cash is never going to bring that person back, but it doesn't mean they have to make other choices that they didn't plan to make.
Right.
You know, with the house that you mentioned, okay, I can stay in the house. You know, we have something to take care of this. We have kids. We wanted to make sure they can go to college. Now what happens? I have to get a second job in order to help them get to college. Now that can happen.
Right.
Retirement. I mean, what a great way to transfer wealth without any taxes.
Mm-hmm.
I mean, because what happens with that death benefit?
Yeah.
You know, I mean, it's tax free. So that's a great thing. And same as you talked about with the elderly. So I think that's one thing to remember, is that you're giving your clients options. It's just in a tough time, you're giving them options.
Exactly. Yep, exactly. And when you have your client's ear, and these are great talking points for you to bring up with your clients about what life can be used for. And we kind of talked about replacing lost income, replacing domestic services. If a caregiver passes away, this is huge. And a lot of times families don't think about this, say we have a breadwinner and we have someone staying home with 4 little kiddos, and something happens to that caregiver. And now that breadwinner not only has to pay all the bills by themselves, but they have to now pay childcare. I don't know very many people that wouldn't be absolutely affected financially by that. I know I couldn't pay a mortgage and a childcare bill on my salary. So something, again, that they need you to bring up to them. And then again, education fund, if that family wants to leave some money for that kid to go to college. And then we talked about future insurability, super important and great talking point, especially for people who do have medical issues and they have tried to get life insurance and they can't. There's certain conditions that will be an automatic decline. So a lot of times I ran across people that are like, yeah, if I could lock in my kids' insurability when they have a chance of, developing this condition later on in life, fantastic. Especially if I can do it for $10 a month, sign us up. Then divorce related obligations. A lot of times in divorces, courts will require both parties to purchase life insurance. So again, every stage of life, a need for every single stage of life that you guys go through with your clients. We talked about paying debts off. The biggest one, I think, that I talked a little bit about school loans, but especially for millennial age, Gen X, we have a lot of school loans. And when 2 people get married, those school loans are now your school loans. So if someone was to pass away, that's not dischargeable by bankruptcy. So, 2 people on a mortgage together, both have school loans. Hey, have you really thought about what would happen if one of you passed away and now the other person's responsible to pay for this person's school loans? Huge. I would not want to leave my school loans to anybody. So definitely something to bring up to your clients. And then again, burial and funeral expenses for every age, because nobody wants to be a burden to their family or have to worry about that. And then Dan touched a little bit on estate and charity, death taxes. So inheritance tax, state inheritance taxes are 20%. So if you're leaving, your son, daughter a home, they're gonna have to pay 20% on that inheritance. And where are they going to come up with that? Sell the house to be able to pay the taxes? So a life insurance policy can give them the money to be able to pay the taxes on inheritance. Of course, leave a charitable legacy either for your family, or sometimes wealthy clients want to leave money to charities. And then additionally, equalizing inheritance between business heirs and non-business heirs. So sometimes you'll see, say a farm, and one child wants to work on the farm and inherits the farm, and the other kid has their own thing going on. They don't want to be involved. So you're going to leave a $5 million farm to one child, and then the other kid gets nothing. So life insurance can be used to equal out inheritance.
You think of one other thing, and what's a big deal for people in the state of Minnesota? They all like their cabins, right?
Right.
Everybody has that family cabin, and they have this idea that I want to make sure that cabin transfers to my kid.
Right.
And so it could be, mom and dad might have a cabin sitting up in Brainerd somewhere, and just because they've had it for so long, the thing's worth, $800,000-$900,000.
Mm-hmm.
Who's going to pay for the tax on that, right? I mean, I don't know how many times I have heard of individuals that they ended up having to sell the cabin because they couldn't afford the taxes and what it was going to cost them.
Right.
I mean, it's just all these different things that come up. As we said before, it gives them options. They have options of things to do.
Yeah. And I don't think, that the mom and dad, when they went to leave that cabin, intended for them to have to sell it or to worry about where they're going to get the money to pay for the taxes.
And I think this is where us as brokers, we can talk to our clients. And again, it's asking those questions, right? Talk to them about what's going on in their lives. And when you start seeing little things, you happen to have this place over here. And what do you plan to do? Are you going to sell that, or are you going to transfer to your kids? Well, transfer to the kids. Okay, remember this.
Yep.
Just those little things that can really help them a lot.
Yep, exactly. And then in the business world, this is huge for a lot of our agents. They write group policies, or they have you guys come in contact with a lot of business owners. And if there's, more than one person that owns a business, I skipped over loan collateral. I'll go back to that. But for buy-sell agreements, so basically this is going to be, key people in a business taking out life insurance policies on each other. So if something happens to one person, the remaining owners of that business have money to buy the other person's family out of that business, which really, again, protects the family, because this family is going to inherit this business they don't know anything about. They don't know what to do with.
But they're equal partners.
So that way the owners can say, hey, we're going to buy you out. Here's this money, which is fantastic. And then just to back up to loan collateral, a lot of times banks will require business owners to have a life insurance policy before they'll loan them money. And then key employee, this is really something to think about. And from a lot of the agents I've talked with, they work with owners that have just not had this conversation, and no one's brought this up to them, talked to them about this. So say you have a key employee in a business that brings in revenue, that has client connections, that, has all these influences that bring in money for this business. So say this person passes away, that business is going to be negatively affected, and they're going to need money to hire someone else to supplement until they can, scramble and figure out how to replace the services that this person provided. So very huge opportunity there, incredibly huge, especially once you start sitting people down. What would happen, right? And then of course, in the group space, retain and attract employees. We've heard the saying that employees will take a job for the salary and they stay for the benefits. So very standard across the board for, upper middle class positions, especially high wage earners. They're going to expect a life insurance policy.
And it's inexpensive, when you look at it. I mean, for a business to offer a group life insurance policy, it's not that expensive. Mm-hmm. So it's one of those benefits that you can do, and you can even have the employee pay part of that premium on it at a very, very reasonable rate. And you look like a hero as an employer by offering this thing. And that ties back into what you were talking about earlier. And those, when people, retirees on so much of these life insurance, everything we're talking about for the most part, other than just right here in the group stuff, has been individual policies, right? Mm-hmm. Well, if you have someone who's an employee, they've been getting their insurance through their work the whole time. Oh, I got it through work. How many times do you hear that? Have it through work. They leave work. What else did they just leave?
The policy.
That policy. And so now there's a great opportunity again for that agent to come back in and say, you know what, you just retiring. It's like, we need to look at some of this. What do you have that we need to take care of?
Yep. And oftentimes what is offered through work will not be enough to cover, everything that we talked about with what the family would need. So
there's a misconception, I think, a lot of people on how expensive things are. And I have this insurance through work. Let's face it, we're never going to die, right? I mean, that's what we all think.
Right.
And then all of a sudden we start getting a little bit older and you start seeing things happen. So, oh, maybe I should think about some of this. So again, that's a key reason to jump at this early.
Yes, exactly. And then some unique features of life insurance that are great talking points, great selling points for life. You get a lump sum of cash. So you just get a check. I've never personally had the honor to give a family a life insurance check. But I've talked to other agents that have, and they say it is the most incredible, amazing feeling to have, a wife who's just lost her husband call up and say, hey, did he have a life insurance policy? And you can present your client a check for $500,000. I've heard testimonials from agents that it's amazing. And it avoids probate, which is also huge. There's no public record of who the beneficiaries are. And it's protected from creditors. And you can take loans on permanent products on a tax deferred basis. So you can, if you have a permanent product that has cash value, you can take a loan, you don't have to pay taxes on it. Again, not subject to federal income tax, so you're not going to have to claim that as income if you are the beneficiary of a death benefit. And then depending on the policy that you choose, if you have a permanent policy, it can grow in cash value tax-free, which is awesome. Huge talking points for your clients.
There's a lot of options on what you just talked about there. It's like and this goes way beyond, I think, what this webinar that we're doing right now is, the scope of it, but funding your kids' education. All kinds of things that can happen within life insurance, how you can use it for. If anyone has any questions on it, reach out to Megan with some of that. She can really, and I'm sure you'll dig into this in later topics, but there's so many different things that are out there that people just don't realize that I could do that with life insurance. Yeah, you can.
Absolutely. And then, speaking of unique features of what life insurance can do, a big thing happening right now in the industry is surrounding long-term care. And life insurance products can offer riders that will provide additional benefits. They're called living benefits, and they're called linked benefit products. So long-term care been in the news a lot lately. You guys might have heard about what's happening in Washington, but basically the state of Washington is requiring every resident over the age of 18 to have a long-term care policy, or they're going to face tax penalty. They're going to take that out in their taxes. So all of these straight long-term care policy insurance companies that offered long-term care in Washington pulled out because of adverse selection and too much risk. So you can have a life insurance policy and it will satisfy that law. And most long-term care companies there, you can't get long-term care policy until you're 40. You can get a life insurance policy with a long-term care rider when you're 18 years old. And I did check into the law in Washington to see the benefits that it would offer. So say you're 18, you've been paying taxes on long-term care. Then when you get of age to where you need that long-term care services, what those benefits offer is not anywhere you want to end up. So getting in front of this is going to be a big thing in the industry. Getting in front of this with your clients, talking to them about long-term care is huge, especially because we've heard talks about Minnesota adopting a similar law.
It's coming. Everything we've been hearing out there, it's going to move to more and more states that are looking at this, just because of such a huge liability in the Medicaid space within these states. So, so it is coming.
Yeah.
You think of long-term care, what's always been one of the big objections that you always get with long-term care?
Too expensive.
Too expensive. And what if I never use it?
Right.
Well, you tie that into a life insurance policy, it goes one of two ways, right?
Right.
I can use the benefit or it becomes a death benefit. So
Yep, exactly.
you get something out of it no matter what.
Exactly. And that goes into, and there are also chronic or critical illness benefits. So you can do LTC or critical illness, which will give you a lump sum of money if you have a heart attack, have cancer, you need money to pay medical bills, you just get a check. And there's options for these policies to fit every budget. Kind of going back to what I've talked about, like one of the greatest misconceptions about life insurance is that it's too expensive. There is a life insurance policy for every budget. And again, lock-in insurability. So something is better than nothing. Having some coverage is better than no coverage. And just like Dan talked about, why do we need to worry about LTC? Our population is growing older at a faster rate than ever. Every day, 10,000 baby boomers are turning 65. So as a population, we're getting older and older. And most people, 7 in 10 actually, so 70% of our population will require some type of long-term care. And it's expensive. This figure right here, you see over $100,000 a year for a private room in a nursing home. I don't know about you, but I don't want to share a room. If I'm ever in a nursing home, I definitely don't want to share a room with someone else. So it's important. And then how do people pay for long-term care? They can self-fund. So if you're really wealthy and you have, 3 to 6 years that you can pay $100,000 a year to pay for yourself to be in a home, times that by times 2 if you're married. So you have the option to self-fund. I don't know very many people who can do that, but or family and friends can help you and take care of you. There's a lot of sadness and stress and a lot to think about when family and friends take care of the elderly. Elderly people don't want to feel burdened. They want to get old. They want to die with dignity, and feeling like a burden puts stress on not only them, but caregiver fatigue is a thing. It's really something to think about and bring up to your clients. Again, it's your job to say, what's going to happen? Is your family going to take care of you? Have you thought about what that's going to be like for them? And then Dan brought up Medicare and Medicaid. This is huge. Most people don't know that Medicare does not pay for long-term care. Medicare will pay if you have surgery and you need, 24-hour care, but you're on the mend. It will pay for that. It will not pay for long-term care. So your options are, you can self-fund until you lose all your savings, all your assets, until Medicaid kicks in, and then Medicaid will pay. But a state facility, again, is not anywhere you want your grandma to end up. It's not going to be good. So again, getting in front of this is going to be huge. There's a huge, huge opportunity here. So kind of once you've, talked with your clients, you've opened that door, you've spoken with them, you have their ear, identify the need, you see, hey, they have a mortgage, they got a couple kids, you don't have life insurance, we should have a conversation. Keep in mind that people will rarely ever, unless they come to you, buy life insurance at the first meeting. It's going to take time. It's going to be, a pipeline, a sales cycle. There's something called the law of effective frequency that says that people need to hear something 7 times before they internalize it, before they recall it, and 9 times before they internalize it. So it's going to take a long time. They're not going to be like, oh, life insurance, I need that. It's going to take some time for them to really to sink in and think about it. And like, we talked about gathering information. A lot of you are already having these conversations close to these conversations with your clients. Just easily branch out, dig a little deeper. Don't be afraid to be direct with people, especially clients that you already have trust built up with. Just be direct. It's not a conversation that people like to have. It's a tough conversation, but it's your job. And if somebody were to pass away, their family is affected negatively financially, and you didn't bring up life with them, that's going to hurt. So if you just say, hey, do you have life insurance? Oh, you're not interested? Okay. They pass away, you can sleep at night. And one of my favorite ways to bring up life insurance with clients it's a very easy way to get them talking. If they're open to talking about it, it'll just open the floodgate. If they're defensive, they're not ready, it's an easy way to kind of get in there without upsetting them. It's just be like, hey, who does your life insurance? Just like you're, writing it down in a file. Who does your life? What kind of insurance do you have? Blah, blah, blah. Very easy. And then it usually goes one of two ways. I don't have life insurance, or I have it through work. Either one is a great opportunity to ask more questions. Oh, you don't have any? Have you given thought to what would happen? So definitely my favorite way to ask is, who does your life? And then how I usually will end that meeting, or would end that meeting, is just, can I shoot you some options? Would you like to see some options? Going back to, people think life is really expensive. A lot of times they're surprised when they see the options that, oh, this is pretty affordable. And I'll talk a little bit more about this, but we're gearing up to do a special session on just a life insurance sales process. But with, shooting clients options, hey, do you want to see some options? Cool. Then I would follow up a couple times, then, the next 2 weeks, a month. But what will happen is eventually something will happen in that person's life. Someone will die, they'll have a car accident, someone they know will get into a car accident, and then they're ready to have that conversation. They might not be ready now, but 4 months down the line, a year down the line, they're going to be ready to have that conversation because something's happened. So just a couple ways to, have that difficult conversation. And again, some talking points on, when you're having that conversation with them. Hey, have you thought about funeral expenses? Have you thought about mortgage, the debts, the college funds, rent, the future living expenses? It's one thing, there's going to be, like the slide says, there's going to be one-time costs if someone dies, and then there's going to be future. And families need to decide moving forward how many years of need they're going to have. It's basically about protecting a standard of living. So you want your wife to be able to pay the bills, buy groceries, not have to decrease her standard of living because a husband passed away. And then we have a needs analysis worksheet. We can get, if you're interested, reach out to me and we can get you this in a PDF. But once you have a client's ear, they're interested. Some clients don't like this approach because it's really personal. So if they're not ready to have this conversation, you might get a little pushback at a needs analysis. But pretty basic. Over here on the left, you're just going to list their assets and then expenses. And then obviously expenses minus assets is how much insurance you need. If you are working with a client who's a little bit hesitant to talk about these kinds of things and be open with them, I just throw out a number like, hey, how much is left on the mortgage? Oh, 475. You want to see some $500,000 options? Do you want to add something?
No, well, and you're absolutely right. I think you can throw that out there. How much is left on the mortgage if they have kids? Are they going to go to college? Do you want them to go to private school? Do you want them to go to a public school? Here's about what you can expect to pay for college. Do you have that? Do you guys have that set? So all right, maybe $500,000. Maybe we need to look at $1 million. Whatever. I mean, you can do some really, really generic math without getting too complex into that.
Yep.
And it can be, if you have enough assets, this can be reduced, but at least it's an area or a way to start that conversation.
Yeah. And another thing you kind of bring up to clients is you get a price break on life insurance when you buy in bulk, basically. So if the first price break will start at 250,000, the next one's at 500,000, the next one's at 750, the next one's at $1 million. So if you get a client that's like, okay, I want $300,000, let's just go with 5. You're going to save money there in the long run. So I'm just going to quickly do an overview of the different types of products. There's basically 2 types of products. There's a term policy and a whole life policy or permanent product. The differences in features: term, you basically get a death benefit in return for premium for a specified amount of time. So it's going to run out. And the best way to really think about that is term is renting insurance, whole life is owning insurance. Another huge objection that I would hear all the time is, oh, you pay all this money and you get nothing. Well, you didn't get nothing. You won life. You survived 20 years without dying. So you technically won. So you didn't, it's not for nothing. It's peace of mind for 20 years that if something did happen, your family would be taken care of. But it's kind of a neat little joke just to kind of loosen people up. I was paying all this money for nothing. Well, no, you won life. So I always like that. And then again, whole lifetime coverage, that premium will never change. It will stay with you forever. Term life, once that term expires, it will renew automatically without underwriting, but it's going to renew at that person's age. So say you were 25 when you took it out, you got a 30-year policy, 55, 65. But it's going to be a lot more expensive. So if someone does have life insurance and it's coming to expiration, guaranteed, especially if they're in good health and we can put them through underwriting again, you'll be able to get them a way better deal than that will renew at, that price will renew at. So obviously payout guaranteed on whole life only within the term for term policies, and whole life policies have cash value.
The other thing with this is that typically when you're talking to people, especially if you're looking at what is what does their life insurance package look like, usually it isn't one or the other. You're going to have a combination, because you think about someone, if you have someone, 30, 35 years old, and maybe they have a mortgage and they have some kids. Okay, they have a couple of kids. How old are they? It's like, I might need $1 million, maybe $1.5 million. But in 20 years from now, my kids are out of school. I don't need that anymore. So maybe I'm only doing a term for a certain amount. You have a base amount we're doing on a whole, but then you do a term for that other part of that. So there's so many ways that whole package can be structured.
Yep.
And it isn't, you're not telling anybody that one's better than the other. They both serve different needs, and what is that need?
Exactly. And we talked about needs for retirement, and you can borrow, so you have a policy that's growing cash value. You get to retirement age, you need $20,000. You can borrow against that policy. Then when you pass away, your beneficiary is still going to get money. It's just going to be minus that 20,000.
Yes.
So super cool.
That's a beautiful thing. And when you borrow against that cash value, it's like, okay, I don't ever have to pay it back. I just reduce my death benefit. But I know many people who have used that feature. It's worked out very well.
Yeah,
for them.
Very cool. And then when it comes to whole life or permanent products, I like to call them permanent products. We have 3 different types, varying degrees of risk, with a fixed universal life. So they're all types of universal life: fixed, index, variable. With fixed, it's going to be based off the current market interest rates, or the current interest rates. So going back to that little graph I showed with the growth of all the policies, the reason why the fixed UL didn't see any growth in 2021 because interest rates were like 3% or ridiculously low. So people weren't buying that product. The good thing about that product is, it could possibly be up to 7, I've heard, but it will never go below 3. So like I said, grows slowly, but low risk. With indexed, it's exactly what it sounds like. It's based on the index. The money is not directly invested in those indexes. It just grows at the rate of return that's happening in those indexes. Whereas variable, your money is actually invested in the stock market. So super high, not the stock market, a couple different indexes, but one of them is the stock market. And you get to choose. So your clients can choose where they want to invest this money at. But with variable, your money is actually invested. So you could lose your money, but you also could make a ton of money. These products are, they do require a little bit more building, and we have an amazing case design analyst, which I'll talk more about him later, but we have the resources. If you have a client who's interested in investing their money in something like this, we have the resources to help them build a product for every situation.
Yeah, I think that when this indexed universal life came out, this was a game changer really out there, because there's so much risk sitting in the variable, universal life, because you end up with the indexed, it's like you participate in growth.
Right.
You don't participate when it goes down.
Right.
And so unlike in the variable, if you have all of a sudden it loses, you're having negative numbers on it, you've lost that amount of money. And now you have to gain all that back just to get to where you were before.
Right.
With the index, I stayed there. I didn't gain any money, but I just stayed there.
Right.
And then, next year it goes up. Well, look at this. I didn't have to try to get back to where it was at. I just take where it was at and I get to continue moving it up. So,
super cool products.
Yep.
They're obviously harder to sell. Term's going to be the easiest to sell across the board because it's cheaper. Whole life is going to be more difficult, but whole life is my favorite. It definitely provides the most value. Like I said, it's owning life insurance. So if you can get comfortable enough kind of presenting these products, great commission on them too. So there's that.
Unlike your Medicare commission or Medicare, I mean, your Medicare commission is great, but you think of your under 65 comp, then all of a sudden you sell a policy and you have a commission check for $10,000. It's just like, okay, it's not uncommon. That's not that expensive of a policy.
Yep. So just the takeaway from everything, 1 in 3 people polled said they either did or they're going to buy more life insurance. So that's a huge opportunity. If you're not taking advantage of that, you should be. But your clients need you to educate them to help them protect what they love. Like I said, you guys love your clients. I've had so many conversations with you guys. You really do care. And it's a difficult conversation to have, but it's for them. It's for the benefit of them and who they love. And again, if you're not talking to them about it, someone else will. So yes, definitely a lot of opportunity. And then real quick, we're going to have a further training, specifically about DBS. We partner with Diversified Brokerage Services. For those of you who don't know, they're absolutely an amazing company. Everybody who's worked with them, super happy. This person is Nate Mortensen. He is LeClaire Agent's case design and analyst. Any kind of, if you have a prospect and anyone who's interested, you want to see some options for them, Nate can build you products. He will explain it to you, how they're going to perform, any kind of special, like for example, we just had one where the person was a tobacco user, but it was only chewing tobacco. So Nate said, well, guess what? We have 2 companies that will rate that person non-tobacco if it's only chewing tobacco. So it's things like that. If you bring to Nate any kind of special circumstances, he's going to be able to find a solution for you. He's absolutely incredible. He's less than, a 24-hour turnaround. He usually gets back to me the same day. So he's absolutely amazing. And just to kind of do an overview of DBS, I can get you access to the website so you can hop on the term quoting tool. There's also a quoting tool for permanent products on the DBS website. If you're very comfortable with that quoting tool, great. If not, just ask Nate, he can get you the quote. But the term quoting tool, there's over 23 carriers that they work with, I believe. So you are always going to be able to find the most competitive rate to present to your client. So going back to being a captive agent, like if I could, shop 23 different companies and always be able to, hey, here's the best rate possible, the best policy, I would have made a killing. So yeah, absolutely competitive rates, 100%. And then like I talked about Nate, their case management, very fast. They'll get you, if you want to write business with a new carrier, you need to get appointed very quick. They'll do any future case management. So any change of beneficiaries, anything like that. They take care of scheduling the paramed exam. They're very, very good at what they do. And then of course, a very generous commission schedule. LeClaire doesn't get a cut of your commission. So, you'd get the same if you went straight to DBS. So there's no worries about, how going through us is going to affect your commission working with a third party. And then I kind of talked a little bit about LeClaire's gearing up to do, some more educational pieces about life insurance, and for sure, definitely a sales process training where we can talk about, a lot of common objections and, how we can deal with objections, the main ones that are going to come up. There's the same ones over and over again, usually. Then we'll kind of do, a deeper dive into the products. For sure, a permanent product, we'll probably bring in an expert to talk more about those permanent life products and what they can be used for. We'll talk more about working with DBS and everything they can do to help you grow your business and be successful in life sales. And then we're going to dive into some specialty areas with the farm ranch. I think I touched on that a little bit, but basically, if you have a farmer, this is a big thing that isn't being talked about or thought about, but a farmer who's passing down a $5 million farm to a kid. Farmers are notorious for being asset rich, but not having a lot of liquid cash. So how are they going to pass a $5 million farm down when there's no cash to pay the taxes on it? And they don't want to lose that farm. So again, it's your job to bring this up to them. And then final expense, like I said, huge opportunity to cross-sell your book when it comes to final expense. Huge, absolutely amazing. So yeah, I think that's all for the presentation. If you have any questions or you want to talk more or have access to that term quoting tool, I'm happy to get you started. And yeah, Dan, you have anything else?
No, I'm looking, it doesn't look like we have any questions that have come in, and we'll hang on here for a couple of, a minute or two if anybody pops in, have any question you want to pop in there. But I just think there's such an opportunity here in the life insurance that it comes from, just as you mentioned before, asking the question, right? Is that we get so comfortable in some of the things that we do and we don't think to ask that question.
Right.
I know we have a lot of brokers that work with us that have P&C clients. It's like, okay, we know that they're selling business insurance to them. It's like, have we talked about, as you mentioned, key man insurance, buy sell agreements, these kinds of things. It's things that they need really to keep that business going,
Right.
Making sure that things are going on.
Right.
Looks like we had one come in here, Megan. It says, I have health insurance only. How do I get licensed for life?
So all you need to do is take your test. So there'd be the 20 hours you'd have to get licensed and then, pass your test. But if you've done health already, life would be a breeze for you.
Yeah, it's pretty quick, and depends upon how old your license is. I know when I got mine, it was a life health combined. It was P&C or life health. And now I think I think life is by itself now and health is by itself. So it all depends on that. Okay, someone says, I have a couple things I need to quote on. Do I start with you or go to Nate?
Me. Absolutely me. No, I'd love to connect with you and just kind of have that relationship, and I can get you started on the website. Kind of get you Nate's information, get you set up, and then I would love to be the point of contact for all of you.
Yeah, that's one thing that Megan does. She would be your first point of contact with anything regarding life, and she'll get you in touch with who, what needs to happen. Just, there's a lot of things, I'm sure that as we're talking about this, if you ever really look at some of the different life, you're like, oh, this is really kind of complicated. Well, some of it is, but you don't have to know everything about it. This is where Megan is able to help you, and she'll direct you to experts in each one of these areas. If you have someone that needs a buy and sell type of plan, she'll direct you right to the person that needs to do that. If you have somebody that, we see this with public employees, individuals that have a pension, they're retiring, and it's like, oh, do I take the first to die, or do I do, the second to die type of pension? Well, you know what? A lot of times they're better off taking the first to die and buying life insurance for the remainder of that, but there's all these kinds of things that are there, that questions that could come to you and you may not know.
Yeah.
That's where they reach out to Megan, and she'll get you in touch with
Absolutely.
the person you need to do.
Yeah. Thanks, Dan.
Looks like, do we have another one here? I think I've seen another question come in here. Well, looks like it's a little bit of support of Nate. Nate does amazing work and is always so prompt. The quoting tool is super user-friendly, and DBS always keeps you in the loop on the progress of the applications. Thanks for that. And that was unsolicited. I want you all to know that came from one of our brokers that has used this, and they really enjoyed what they've done with that.
Thanks, Steve.
All right. Let's see. All right. I think we're good there, and that looks about everything.
Yeah, awesome. Thank you guys so much for joining us, and stay tuned for future upcoming. This one is just an overview, but we're definitely going to be offering some more specialty training. So stay tuned for that.
Any other questions, please reach out to Megan.
Yeah.
Thank you.
Thanks, guys.